This PowerPoint presentation attempts to explain the following points. First, what the Banco Filipino Retirement Fund is. Second, how the conversion of the retirement plan from an employee trust to a corporation was disadvantageous to both Banco Filipino itself and to Banco Filipino employees. Third, how the conversion could have exposed the retirement fund to mismanagement or misappropriation by Banco Filipino management. Fourth, how big the Banco Filipino Retirement Fund could have been. Fifth, those who may know the true state of the retirement fund, namely, the fund's trustees and incorporators. The funding medium of the Banco Filipino Retirement Plan was the trust prior to the bank's first closure in 1985, and even after its reopening in 1994. In 2007, the funding medium was converted from an employee trust into a corporation. The Banco Filipino Retirement Fund is a corporation whose main purpose was to incorporate the existing retirement plan of Banco Filipino into an employee's non-contributory retirement entity that will, first, provide and maintain a fund derived only from the contributions of Banco Filipino for the distribution to the members in the form of benefits in case of retirement, resignation, separation, or other causes. 2. Extend financial assistance to the members of the corporation. Third, invest its funds, if any, in high-grade securities, real estate, or other low-risk non-speculative investments. Fourth, purchase, acquire, hold, lease, sell, mortgage, exchange, convey, or otherwise dispose of, real as well as personal properties. The Banco Filipino Retirement Fund is a non-stock corporation. Its funds are supposed to be only derived from the contributions of Banco Filipino, as well as earnings from, or income credited to such contributions. Moreover, no part of the said funds, or properties of the corporation, shall be spent for the personal benefit of the members, officers, or trustees, except to the extent permitted by the corporation's articles, bylaws, and applicable laws. The retirement fund was invested in Banco Filipino stock. As of December 31, 1999, it owned 21.46 million pesos in the stock of Banco Filipino. Its general information sheet as of February 7, 2008, indicated that it invested 39.34 million pesos of its funds in the stock of another corporation, which is potentially the 2.7% ownership of its parent company, Banco Filipino. It also had 138 million pesos in ordinary deposits in the now closed Banco Filipino. The conversion of the Banco Filipino Retirement Plan's funding medium from a trust to a corporation resulted in the following. First, its non-management by Banco Filipino's own trust department, which is the default standard by which other banks manage their own employee retirement plans. Second, its rejection of tax deductions. Contributions made by Banco Filipino to the fund were not tax-deductible to Banco Filipino. Banco Filipino did not enjoy a tax shield on its contributions to the fund. The tax shield has the effect of lowering the cost to Banco Filipino by as much as 32% of the contribution amount. Third, its inability to grow tax-free. The fund could have saved the 20% final tax on bank interest. These benefits are only given to trusteed retirement plans, and not to plans that are incorporated. The conversion is harmful to the economic self-interest of both Banco Filipino and Banco Filipino employees. For Banco Filipino, the loss of the tax deductibility of the retirement contributions could cost anywhere from 10 million pesos a year to 20 million pesos a year in terms of tax shield savings. This is remarkable for a bank that should constantly be scrambling to reduce costs, given its annual losses of over 2 billion pesos a year. For Banco Filipino employees, the loss of the fund's ability to grow tax-free reduces the benefits of compounding interest income. It translates to a loss of additional income, anywhere from 1.2 million pesos a year to 17 million pesos a year. Over 5 years, It can mean fund balances that are 6% lower, without tax-free growth. Over 10 years, it can mean fund balances that are 9% lower, without tax-free growth. The conversion allowed the funds to become the funds of a corporate entity, distinct from the employees. The conversion took the fund's investment management function away from the bank's own trust department and transferred it elsewhere. It exposed the fund to the whims of Banco Filipino management. It possibly allowed Banco Filipino management to mismanage, or even misappropriate, the funds. How big can the retirement fund be? The bank spent around 600 million pesos in compensation expenses annually. If the bank set aside 5% of compensation expenses as annual retirement contributions, the annual contributions would amount to 30 million pesos a year. If the bank set aside 10% of compensation expenses as annual retirement contributions, the annual contributions would amount to 60 million pesos a year. With the compounding of interest income, the fund could have grown to a substantial amount over time. Even if it had zero assets at the time of the bank's reopening in 1994. If the fund had any assets carried over from the bank's 1985 closure, the fund's assets will be even bigger. The estimates for the retirement fund balance assume the following. 1. The bank sets aside 5% to 10% of its total annual compensation of 600 million pesos as annual retirement contributions. This amounts to roughly 30 million pesos a year to 60 million pesos a year. Second, the retirement contributions were invested in safe, but relatively low-yielding, investment instruments, such as savings deposits, time deposits, treasury bills, and money market funds. Interest income was assumed to be reinvested. Third, interest earnings on the invested funds were taxed at a final tax rate of 20%, beginning in 2007, when the retirement plan was converted from a trust to a corporation. Fourth, 3% of the fund balance was withdrawn every year, in lump sum, to pay for retiring employees. Fifth, the fund balance in the beginning of 1994, the year the bank reopened, was zero. No retirement assets were carried over from the bank's closure in 1985. At the 5% rate, the fund balance is estimated to range from a low of 411 million pesos, when invested in savings deposits, to a high of 605 million pesos, when invested in money market funds. At the 10% rate, the range of estimates doubles, from a low of 822 million pesos, when invested in savings deposits, to a high of 1.2 billion pesos, when invested in money market funds. What does this mean for the bank employees? It means that the average retirement fund balance for each of the bank's 768 employees is fairly sizable. At the 5% rate, the average fund balance per employee ranges from a low of 536,000 pesos per employee, when invested in savings deposits, to a high of 788,000 pesos per employee, when invested in money market funds. At the 10% rate, the average fund balance per employee ranges from a low of 1.1 million pesos per employee, when invested in savings deposits, to a high of 1.6 million pesos per employee, when invested in money market funds. Banco Filipino employees have been out of work for 5 months. They have been clamoring for the reopening of the bank to resume employment. Most of them have no idea as to how much their retirement funds can add up to. The estimates presented here are an attempt to shed light on this issue, but they are based on assumptions that may or may not have any bearing in reality. The only persons who know the true state of the retirement fund are Banco Filipino's management, as well as the fund's incorporators and trustees. The list of the incorporators of the Banco Filipino Retirement Fund is as follows: Teodoro Arsenas, Banco Filipino's president and director. The late Conrado P. Banzon, a former Banco Filipino director. Orlando O. Sampson, Banco Filipino's treasurer and director. Maxi S. Abad, Banco Filipino's Executive Vice President and Director. Francisco A. Rivera, Banco Filipino's Corporate Secretary and Director. Roberta A. Afabla, Banco Filipino's Senior Vice President. Dionisio M. Domingo, Banco Filipino's Vice President. Jorge D.U., Banco Filipino Employee Union Leader. Emmanuel C. Panzan. Mila L. Valera. Yvonne S. Mooner. Anne-Marie F. Copo-Bianco. Jose Lito H. Moral, Banco Filipino Bank Manager. And Ronnie Jason S. Marquez. The list of trustees of the Banco Filipino Retirement Fund is as follows: Orlando O. Sampson, a Banco Filipino Treasurer and Director. Francisco A. Rivera, a Banco Filipino Corporate Secretary and Director. Emmanuel C. Panzan. Anne-Marie F. Copo-Bianco, Jose Lito H. Mora, a Banco Filipino Bank Manager, and Ronnie Jason S. Marquez.